I am a skilled day trader. I take day trading seriously, and I am a master of it. I have a fine-tuned sense for knowing when to enter and exit trades. I always take smart and calculated risks. I only take smart and calculated risks. I know when to be patient and when to act on my trades. I am constantly improving my day trading knowledge. I easily adapt to new trends and shifts in the market. My mind is highly aware and focused at all times. I am 100% present when I am day trading. I keep a positive mental attitude no matter what. I live and breathe the markets. I love day trading. I have strong intuition for when to make great trades. Being a highly successful day trader is the norm for me.
Yo, good morning, everybody. Whoa, what the fuck is happening here? Yeah, what's up, everybody? Hope y'all are doing well. Got some issues going on here. Not too sure what that's about. I thought everything was going to be good. Guess not. But yeah, so we'll see what happens. Get into some stuff in a minute. So I guess we don't have any news today. It's kind of weird. We had something yesterday, but guess that has changed. So yeah, what we're dealing with at the moment, it's looking pretty chaotic. Apparently we got this stupid shutdown. It's super annoying. But again, all the things that we talked about on Sunday seems to have came to fruition, right? Well, on Sunday, we kind of talked about with the indices, we wanted to see how price was going to treat this change in state plus this change in state. When we got below it, respected it. Then we had this large wick. On Sunday, I mentioned that, you know, if we stay below this and we stayed below the daily fair value gap here, depending on how we also treated this, right? If we traded up into it and then started rapidly continuing lower, that would make us really confident that we were going to look to sell off, right? When you want to switch your narrative with whatever direction you're trying to go in, it's very important to understand what levels are going to justify that change. And, you know, in any normal week that was trending, that wasn't consolidated, that maybe didn't have all this chaos, right? Because some of the news is going to be messed up. Because, of course, like I mentioned, there's going to be a shutdown, right? There's too much disagreement. So apparently that took off the news event that was going to happen this morning. So now we're on a Tuesday that has no news instead of, you know, one at 7 a.m. So that's something you got to consider. So that may cause a problem. Those of you that have been with me for a while, or those of you that are really diligent ICT students, you know that ICT has on numerous occasions mentioned large ranges lead to small ranges. So when there's a large previous day, generally that could lead to a small range delivery. It just may be like a, you know, a pause, right? Notice how we came all the way back to this new day opening gap here. Let me make sure everything's set up correctly. So with the fact that all this stuff is happening, the possible shutdown, you know, the fast-paced previous day, that's going to put us in position to have to lower our risk, all right? ICT himself has also said that if things don't clear up, he's just going to be navigating on demo, which, you know, it makes sense. Yesterday, I did call a buy with my private group right in here. The logic that was utilized, just kind of go into that real quick. So we started yesterday thinking about this wick in here, right? And then how Sunday was a large range, right? It could have made yesterday a slow type of delivery, but instead, well, on top of the fact that it's Monday, yesterday, and then it still is also the start of a new month. It's also the start of a new week. And we have all this chaos, right? This possible shutdown. It is a shutdown until these, you know, politicians get it together. So that's going to have an effect on the market. You know, luckily not every asset is subsidized by the government, so it may not have as much of an effect. There's a lot of subsidies that are for a lot of these companies though from the government. So yesterday we started off trying to see how this was going to behave with this wick here. If it would have traded up into that, maybe filled in the rest of this, I would have preferred that it didn't. I would have looked to go short. I would have seen this as a market maker sell model. And that's what we kind of assumed at the start of the day. ICT himself also mentioned that he was trying to be bullish. Right? He was trying to look at these equal highs up here. Or he was looking to be, bullish, right? Just to run up a little bit and then see if we can get, something to go lower, right? But then, of course, right, it accelerated aggressively, overtook this, broke the 50% of this range here. We have this order block. We have that second change in state here. Why is that the second? Because there's one here, right? Why is this also important? Because it's reacting from a higher time frame PD array that we've talked about for literally weeks. There was also a new day opening gap right here. Zoom in a little bit. You could see the clear new day opening gap. This is a new week opening gap, right? New week opening gap. That's a new day opening gap. I think this is one as well. See how it's uneven? So that's significant when price trades into it, right? It attempted here, but it failed. And then, we did all this nonsense. And then it ran lower, took out the lows, and then started rallying up again. Then once it hit that level and this upper level, which is a regular trading hours gap, there's SMT also at the highs from here to here. The other two broke the all-time highs, but the Nasdaq didn't. So what happened? The Nasdaq was the most aggressive sell, right? Out of all three of them, right? The S&P made a higher high. The Dow made a higher high. But this one has made a lower high, right? So as a result, if it was going to sell off, right, which it did, we started to target something like this. We wanted to see how this would respect. And if it would have respected that, also this high to that low, if it would have stayed above the 50%, we would have been more likely to try to seek a buy side position and less likely that it was going to potentially do what we saw here, right? With this one change in state, a second change in state. This was also pretty convincing as well. We also have 3 PD arrays being violated as well as this range. It wasn't really showing much respect. It did kind of hint at it right here with this big wick. But then this right here, trading up into this candle, just showed that order flow, at least for that time, was bearish, right? And so that's kind of what we used as a reference to see, okay, well, this next candle, if it opens up, how is it going to treat this? But we immediately, out the gate, dove lower, swept out this sell side liquidity here, and then it immediately turned around, right? And then once we got above the, let me go to the other chart. Once we got above this new week opening gap here, once it took this high, we then transitioned to be able to target this or frame something like this, which I didn't participate in. It just moved too quick, and I didn't really trust it. And it was Monday, and there was like no news until I think it was a news event at 7 a.m. PST. But it was doing too much rapid, wild delivery. There was like no correlation. Everything was just all over the place. So I just chose to sit on the sideline, right? And then the initial idea, trying to see this respect plus the wick here get respected. So then we could go lower off the heels of the second change in state here that did provide evidence that it had a likelihood of continuing lower. But because that didn't happen and we started rapidly repricing higher, we then looked at the equal highs up here, right? We looked at this high to that low, saw it as a market maker buy model. And then that was able to get us into the thought process of this being a second stage distribution to then try to target the buy side up here, going against all of these levels that ended up obviously getting taken out, right? So we immediately went from, okay, well, the shorts are logical to, okay, now it's time to transition to buys. We had to wait a little bit. I think I had a student take this short in here. Or wait, no, he took it on gold, actually. He took it on gold over here. I think it was right there, that move. Take some of that off. Not worried about gas and oil. But yeah, so before I move to gold and talk about that, I want to finish this. So that was yesterday's opinions. Was there an opportunity to trade? Yeah. Did we call it out before the fact? Yeah. I'll probably have students from the private group, popping in. Let me see. Yeah, Mike's from the private group. He could vouch for the fact that we were calling this. We adjusted. We started off bearish. Then we looked to see, how it was going to be respected. It proved that it wasn't going to respect that stuff. So we were not about to continue to hammer sells if it was not allowing for it, right? It was a fast, not really even a fast drop, except this day on Sunday. All of this is high resistance, right? And then we got this rapid repricing. So you could see the difference between sell side delivery and buy side delivery, right? Very slow sell side, very fast buy side. So that's generally a good indication of what the actual narrative is. It's not a be all end all. You can't just assume this. You have to have context, which we do, right? You have this wick, it should have respected. Instead, it respected the 50% for a bullish run, right? The 50% of the daily wick here, right? Then we had a breakaway gap. We have sell side, buy side delivery. So that's a balanced price range. Change of state of delivery was here. So if we can get a second retracement that then gets violated, we'll treat it the same as we treated this, right? There's a change in state there. We had another run up, respected this wick as a BPR, and then we had another change in state. And then the next couple candles did what? It respected it and went lower. This is it's one of the tactics we use for validation to know when things are going to change or when things should continue. So if you haven't used that, you really should, or at least go back and study it because it's super powerful. Okay. So yeah, if we see that happen again here, but to the upside, then we'll continue to look for possible buy side targets. Right. The first target potentially, depending on how this is treated, right? If this just respects this and then we get, down into this again, maybe it goes lower, right? But, we're still kind of in a range. It's a very nasty condition. Plus now there's a shutdown, which I've been talking about for the last couple of weeks, because one side of the political spectrum came out and boldface said that we're going to shut the government down because we don't like what you're doing. So it's something that we've anticipated, and I don't think it'll be the last one either. People just can't get along. It's too many different opinions that just collide. They have personal objectives, and it's just a nasty game right now. And normal people have to they face the wrath of it because people can't get along. So it's going to affect the market. That's why it's even worth talking about. So keep your attention on what happens with that. I'll keep you guys updated. I always talk about recent things and how they may affect the market. So, nothing's going to get past us. One thing, too, I want to address. I was hearing or seeing on social media that something happened with other countries. They basically had a pause for futures trading. And then all of a sudden, ICT traders come out and say, see, they're going to close the market. They're going to turn it off. It's not worth learning this and blah. I mean, it's wild what's happening. Futures trading is not going anywhere. I don't care who says anything. And if it does, we'll see it from a mile away. It won't be a surprise. Because you got to think, farmers, big chocolate companies who buy cocoa and any other commodity, they hedge their risk with futures trading, right? They are heavily involved. It's not just you and me and anyone else that's pushing buy and sell that's involved in these markets. There's like massive connections that need to stay intact for society to run properly, right? Like on a commerce level. There may be changes in regulations, right? They may make the margin pretty large. There may be new risk or new regulations for funded accounts, right? There may be stuff like that happening, but it doesn't happen abruptly because this is a moneymaker, okay, for them. Fees and all that. Like, people are heavily invested in this. So don't allow social media and this hysteria, which I'm starting to think is a lot of marketing, because it makes people hysterical, but I don't know how it's even positive marketing because it makes people not want to learn. Maybe it's a filter process for people that aren't serious. I mean, I have really no idea. The risks of, the risk in trading is obviously chaotic, but when people are trying to do this for their life, like this is what they're doing instead of going to college, for example, I don't think it's responsible for anyone to come out and say, oh yeah, it's going to disappear. It could disappear. Like, really? It's unfortunate, honestly. But just know that if something is going to happen where they're going to take it away from us completely, they're not going to be able to just do it overnight. They may turn it off for a second because there's stuff, whatever the hell is happening, like an attack or something, or some craziness. And there may be a time where you won't trade or have access, but it's even ICT came out in the Trader Roundup conversation that's with some of the people in ICT's community, which I don't really listen to because there's too many people that mix things and have different, applications for ICT concepts, claiming that, they may have discovered something. ICT has came out multiple times telling those people that you didn't come up with anything. Stop claiming you did, because it feels like you're ripping my stuff off, So it's good, right? If you want to go in there looking for psychological stuff, but you got to be careful, They're good people over there. I'm not saying anything derogatory about them. For me though, I listened to them for a little while and I couldn't take it. It was too distracting. There's too many differing things. It kept me out of alignment, thinking that I need this and need that and need this and need that, when, you could just simply use ICT's concepts as they're taught with no adjustment and it works fine. You just need experience. Just like with anything else. Everything is a foreign language when you don't understand it at first. But again, futures trading is not going anywhere. Okay. So silence that completely, and honestly, do this. Go on ChatGPT and ask, what is the realistic scenario where futures trading would be banned? And is it even possible for that to happen? Can you give me a detailed breakdown? Because, I'm fearful because all this crap that's on social media and all these people saying this and saying that. Just give me like a realistic breakdown and it'll give you a lot of details. I'm sure, but just bottom line, it's too important, right? It's not just for people that trade. It's for commerce, business, for things to run properly, right? It's a pillar to the financial system. And yes, there's changes happening in the financial system. There's a lot of things happening and there's, risk, like, banks are going through it and all this other crap that's happening. Apparently they have $1 trillion loss, unrealized loss that banks are sitting on right now, which is kind of scary. But that's why you want to have real assets. You want to have things in your possession. But again, people ask all the time when they're trying to learn from me or anyone else, especially in ICT's camp, how realistic is it for me to think about this as a real income? Aside from whether I can do it or not, skill set wise, like longevity wise, is it going to be here? Is it going to be taken away? And nobody knows for sure, obviously, but at the same time, you will know well in advance, and it's highly unreasonable to think that it's going to be taken away. There has to be some very obvious things that are being talked about. The government itself would have to come out and say it to your face in Congress before any of this happens. They can't just wake up and CME decides, okay, no one can trade anymore. There's laws that are intertwined with this activity. So on top of the laws, on top of, how deep it is with everything, it's unrealistic to have that fear. There's so much more stuff to think about, and it's a distraction. And I just hate when ICT eggs this on. But then in a Twitter space, he says, no, it's unrealistic that they're going to take it away. But then he responds to a student with this fear saying, soon you'll realize who I really am. Really, bro? Come on, dude. Like, I do this full time. That type of stuff made me fearful. But the more that I understood the market, right, the less I, became fearful, right? The more that I understand how important this is and how this stuff really works versus just thinking that traders are the only ones that engage. It's much, much deeper than that. So I just felt, I have to come out here and say this because, it's ridiculous. It really is. And again, nobody knows for sure, right? Maybe he does end up being correct later on in 100 years. But in the near future, it's not happening. It's not happening. I don't care if crypto takes over. It's not happening. There's too much money involved, and they're not going to let it go. Not only that, globally, countries are involved in this, like for their own benefit. It's not just Americans, There's investment in the United States, in the capital markets of the United States from other global powers and countries. So that's another layer or another reason why they cannot just remove it. It's just the way it is. Okay? It's just the way it is. So don't be fearful about that, please. For your own sake, not for my sake. Right? I don't care. Like, you can learn from me or not learn from me. But, don't let this type of stuff cloud your mindset. It's not worth it. I promise you, it's not worth it. But this is worth sticking to, even if it takes you a lifetime. So just felt I should come out and say something. I told my private group about this, but I wanted to also tell you guys, because the post where this person was sincerely worried that ICT responded to, basically affirming that, yeah, the risk is there for this to be taken away in like soon. Like, really? Maybe it's like an urgency tactic, right? To get the students urgently trying to learn so they can hurry up and be successful. Maybe that's part of the tactic, because a lot of stuff is marketing, which he's admitted as such, which it's genius, right? But then again, it's like kind of contradictory. Like, okay, you want me to listen to all this stuff and then focus and pour everything I have into this and not even go to college or not do anything else other than this, but you're telling me it might be taken away? It's just kind of contradicting, and I can't stand it. I remember when I was first starting, all these things. Is the algorithm going to change? Is the market's going to be taken away? Is this viable long term? It's been like this for so long. ICT concepts are so good. What if everybody learns and it's going to be, seen by these institutions? Are they going to take it away? Are they going to make it so we can't do it? It's highly unrealistic, at least in this current time in history. It's very, very unrealistic. So yeah, I just felt like I wanted to come out and let you guys know this. And you could take my opinion or not, obviously, but that's what I think. And I do this full time. Like, this is literally what I do. Outside of this, I have no backup. And even I'm not worried about it, right? I'm just like, whatever, dude. Like, it's not true. And you'll see. You'll have time to make those preparations. It can't happen overnight because, again, it's too heavily involved. There's too many people with their hands in this cookie jar for them to just take it away, because it'd be chaos. Economic collapse. Countries would, probably take a hit because they've invested in the capital markets, So investment wouldn't be flooding into the market, right, from other countries, or like from other countries into this country in general, if they figured something like this would happen. It's highly unrealistic. So again, be very, very careful with what you allow into your mind. I talk about this all the time too. You got to have a good small sphere of influence. If you have a couple educators that solely teach ICT concepts, or maybe you just listen to like a handful, right? Or maybe just ICT and one other person, make sure that it's tight. If you have 15 other opinions, you're absolutely tripping, right? Like, not everyone has the same objective. Not everyone thinks the same. So for you to have this guy, this girl, that girl, whatever, retail plus, I mean, you could just imagine how much of a chaotic mess your learning becomes and why it will take you definitely 10 years to learn. You know, be a specialist, focus on these concepts or something else. You don't have to do this, but just focus there solely. I'm obviously biased. I think ICT concepts are superior. I've been trading for, 7 years almost 4 years full time, just with ICT concepts, nothing else. I have students that just, use a lot of things that we talk about, just straight ICT concepts, and they do well. So, I mean, and then everybody else that you see on social media that's doing well. So again, keep your sphere of influence small. Don't let yourself be spread too thin. I promise you it's not worth doing. It's more stressful to you. And again, you can take my advice or not, but with wisdom and time, if you're hearing this message, you'll look back and think, damn, that guy was right. He was telling the truth, in the world of nonsense we call social media, right? Sorry for not responding, but good morning, David. Appreciate you joining us again. Good morning, George, Tony, Mike. Appreciate y'all hopping on. Those of you in my private group, we talk about this stuff all the time, but yeah. So just focus, you guys. What I do here, mixed with ICT's YouTube channel, you have constant support with someone that proves it every day, literally every day in my private group. We're live every day through all conditions. So you have that constant support. You have other people doing it. But then you also have, me on YouTube. For those that, either don't want to join the private group or can't, you still have the resources here and with ICT's concepts. And that's all you need. You really don't need more. Maybe you can add whoever else you like too, but we have a very specific process. It never changes. It's constantly the same. It's a very organized process. And if you're listening to anyone else, you should be able to say the same thing about them too. It shouldn't be like, oh, this person does 500 things different every day, so I can't even figure out what to really focus on because there's too much. If that's the case, minimize it even further, But you should really be pruning your social media. It's my opinion. That's what I tell my students. You shouldn't have 50 people. You can have, like 5 or so. I have a couple mentors. ICT, I have Jade Cap. Well, he's not my mentor. He's a friend. But, we've bounced ideas off of each other. I have very specific mentors that I've worked closely with, like ICT and this other ICT trader named Joe Miller, one of the best. He has a Telegram channel. He calls it ICT Flashcards. Then he has a one-on-one private group. It's very pricey. I think it's like $3,000 for lifetime or something like that, and then like $500 every month. You could buy 3 at a time, but I can't remember if he still has the lifetime available. But it's a lot more expensive than what I offer, and all that information is brought here. Things that I've paid thousands of dollars for. So just again makes what we do here more superior than a lot, and less barrier for entry. But it is what it is. People like what they like, I guess, right? But yeah. So again, if we get into the chart, we're getting closer to the open. So again, there's no news. So what do we do when there's no news, right? We have to use the 6:30 time as our planned manipulation time window. All right. Good morning, Fancy. Appreciate you hopping on. Appreciate you always hopping on. Don't forget to like the video, you guys. Subscribe to the channel if you haven't already. If you have joined me multiple times and you like what we do here, it definitely helps support the channel. If you guys want to always have a discount for Tradeify, I do have that, right? I've been blown away with Tradeify. You just have to use the code WMG, or you don't have to, right? I just wanted to make sure that everyone can have discounts who support me no matter what. Even if they're not providing a public discount, we will always have one, right? So it's part of the reason why I partnered with them too. But you can use it or you don't, right? Just wanted to make sure you guys know that. WMG is the code. But yeah, so if you guys do support the channel, like I said, don't forget to like the video, subscribe. It helps me get in front of people like you guys. So yeah, and what we do here is superior, you know, and I've, I mean, I've proved it. Everyone that's been with me for a while admits it. Every week you guys see what we do as well. So here on YouTube, it's a lot as well. So yeah, you know, getting back to the chart, I don't know why some of my charts aren't pulled up yet. Why didn't it load? Okay. Where's the markup? Okay, let me clean. Oh, there it is. So just yeah, see, we talked about this too. It was so extended. We said maybe it gets up there. But yeah, that wouldn't have worked out. I didn't even realize we. I think we got off at 8 o'clock. Something that we sent off to watch. When price is so extended like this, it's very risky to try to take entries. But yeah, this one turned into not so good of an idea. This one right here yesterday was something that we looked at for the buy model, second stage distribution. We had this large wick. We had a retracement. Could it have went down lower? Yeah, but thing is, once we got above this, we have an up wick here, and it was a market maker buy model. Another thing that we pointed out as well was one of these older first presented fair value gaps from January 12th. It came down into that, respected it, and then we had the buy side market maker buy model target. Eventually it got tagged, right? That's some of the things that we talked about, called 2. Then the last hypothetical, which I encouraged to just study because it was so overly extended, wouldn't have worked out. All right, the logic with this would have been stop run, right? High, low, pretty equal highs, plus another one up here. Return back down into this candle would have been a potential bullish breaker, but it just chose to dig a little bit deeper. The objective obviously was correct. It's just this timing. Another reason I said not to engage this was it was outside of the macro rules, right? It's outside of the 850 macro. You could see that this entry here was inside of the macro, right? You see 7 a.m. Pacific Standard Time, right? 7:10. This move in here too was inside the same macro, so it worked out. Something outside the macro didn't work out. Just further amplifies the importance of the timing element. ICT calls a macro. By now, those of you that have followed me for a long time, even though there's some people on social media in the ICT camp that claim macros don't work, which is stupid. They're just trying to separate themselves. You guys may know who I'm talking about. I think it's a controversial thing. That's all they're trying to do. It's not valuable. It's self-serving. So, you know, unfortunately, this industry is filled with those kinds of people. Not here. I make it a point to not be a self-serving idiot. But yeah, macros are vital, right? We're the 550 to 610 macro also was something we just kind of printed inside of. Okay, so if we go, let's just move to the DXY first and foremost. So if you guys remember, I talked about this low and this little gap. The first thing I was looking at was to see if we could respect this and then start to print lower. Obviously, it chose not to do that. It's inverted it, and now look, right? It's traded buy side through the void, which has no liquidity on either side. Well, no trading on either side. So price, what did it do? Overlapped with a bullish candle. And then it simply came intentionally down to the low of that little gap. That's not random. That shows that there's a reason that we plotted this. The price is referring to it. So it offered buy side, then came down one more time, offered sell side, and then it immediately started going higher again. We have this low in here that needs to be observed. We need to see how sensitive that's going to be, if at all, right? It's going to be sensitive. Then we have this green box in here. This green box is a quarterly fair value gap. I mean, we've been using that for literally a whole year at this point, a little bit more than a year, actually. It's important. You know, it's one of those sensitive levels. So let me see. So yeah, we're kind of breaking through the 50% of that. If you go from this high to the low, we have buy side taken, sell side taken. A return back to a premium is not unreasonable, right? It has kind of went a little bit more aggressive than I would have liked if it was going to be bearish. It's totally fine, right? But the deeper it goes, right, like if we were to take this out, right, and just get beyond that, that's a little concerning. 100% we're going higher if we break outside of this down candle, because we have a low, high, then a low here, right? This right here, right? Low, high, lower, low. This becomes a bearish breaker right here, this down candle. So them returning up into this level starts to make a little bit more reasonable sense, even if we were still going to continue to try to be bearish, right? Because now we have a breaker here, low, high, lower, low. So coming up into that is another reason why this low, we're going to have to see how sensitive that is. Because all of this can just simply be a retracement to then go lower, right? We get even more confident about downside delivery if we can tap this, get very reactive, and then we can close below this gap again, because then we'll have buy side, sell side offered in that gap, and it couldn't hold as support. If we end up getting deeper, say we get up above this quarterly fair value gap again, this high to that low, we would transition to looking at it from a market maker buy model perspective. If we get this to react from here, on the contrary, say it respects this breaker in here that I just mentioned, and then we start to really drop and we get down below this, instead of a potential buy model, thinking about this being targeted, right, if it gets up there, we would then transition back into the continued down movement and then think market maker sell model. This is how you can visually understand that market maker models are in play at all times, right? If it's a retracement higher to go lower, it's a sell model and a failed buy model. If it's a retracement to go lower or retracement lower to go higher, it's going to be a failed sell model for the retracement. It would set up the formation, but it would not complete. And then it would transition back to a buy model, right? Everything that goes up to go down is a sell model. Anything that goes down to go up is a buy model, right? It's something that you really want to burn into your mind, because it's something that's just happening all the time and there's no escaping it. Okay. So yeah, let me know in the chat if that makes sense, or if you have been looking into that, right? I want to see kind of where you guys are at with that. If any of you guys use that, being here in this community, you're going to use market maker models. If you want to listen to what I'm saying, or, take my opinion and learn from it. Because it's a pillar to what I do. You guys see what I do, So, and Dave, you're welcome. Sorry, just saw that message. So yeah, hopefully that makes sense, because that's where my mind is at. So I'm in a mode of, let's see how this reacts here to this area here. Right, and we're above this, so it's starting to show early signs. We do have a change in state. So again, if we get a retracement that fails to break this, and it creates a bullish order block, like with down candles, and then it trades above that, that's an early sign that we will in fact get deeper. So then we can trust it a little more. But then we'd still have to observe this, because this whole range in here being the bearish breaker on the weekly chart. I think it's also an order block from them. Yeah, it's an order block too. That staying intact obviously would be able to hold price. right? At any moment, this could just simply have been just a retracement to go lower. So we're in a mode of, let's see what happens with the dollar. You know, early signs, right? But you know, we'll see what happens. It's NFP week as well. So a move from this level may require a red news event. If there's a shutdown, there's not going to be any, well, if this continues, the stupid shutdown from the 30th, there's not going to be really any announcements. Just like how they took this away, right? It's tentative. Anything that says tentative in a shutdown is not going to happen. So you can count on it not showing up. Even NFP, right? It may not even offer anything. Remember a couple months ago, it was, I think, like 2 consecutive months almost of a shutdown. Like, really? Like, and so we didn't get any news. So we didn't really have any volatility injection ideas to look at using the news like we normally do. So yeah, so that's my opinion on the dollar. Hopefully it makes sense to you. And if we move over here to this, so again, there's been a fast-paced run higher. It's blown through a lot of these levels. So we're watching what this response is going to be from this area. Right, if we move up, is there? Yeah, so we're also, this wick here, right, it's also the daily order block. So we're pulling into this daily order block here. It's going to be a significant level. How this daily fair value gap is reacted to is going to be important as well. But again, large ranges lead to small ranges, you guys. So we may not really see too aggressive of a delivery in price. You know, it may be kind of slow. There's no news now. We're in a shutdown. So things could be a little bit sporadic, but we have equal lows here. So even if it was bullish, wouldn't be too unreasonable for them to want to try to come down, maybe tag that. And if we could see SMT, which we have here, we have it at the highs too, between the indices. But yeah, initially, given this huge run, I would be looking to see, can we take these people out first and then maybe set up another run, maybe sweep that and then get back above the daily fair value gap so then we can hold it to go higher. You know, this may also be used to try to purge some of this. You know, if price comes down to target this, we may see it tag it as a low resistance liquidity run. If the narrative is bullish, though, any sells should be classified as potentially high resistance, right? If you're bullish. Reverse is true if you're bearish, right? The buy side retracements would have a lot of choppiness. It'd be, you know, a bit more reluctant to get to those levels. But then once it gets back in line, it looks something like this, right? Very choppy sell-off, but rapid buy-side delivery. This is typical characteristic of, you know, being bullish. You know, and the bullish PD arrays are being respected. Bearish PD arrays get violated, like you see here. Wicks get respected to the buy side, 50% of them, if they get tapped into at all. Fair value gaps get left available. They get left open. Right? So all of that's characteristic, especially if stops get taken to the sell side and then we just accelerate almost every time. Right? So those are characteristics of institutional order flow. We do have 50% of the yearly wick right here. Not sure where the 25% went. Not sure where it went. But yeah, so if this continues, right, it should be able to give us a buy model. It is a range-bound environment, so you got to be very flexible. And if you do get proven wrong, like say it tanks down into this, you know, maybe we're in a sell model. In a consolidation, it bounces back and forth, buy model, sell model, buy model, sell model. So you don't really have too much of a, you know, one-sided long-term idea to get behind. But that's what makes market maker models special, right? It's another thing that makes them special when you can understand them. and how the market ebbs and flows in and out of each of those from one to the next. So again, my opinion for now, I want to see if we can take this. We do have this high to that low. This may end up being an order block. If we move up a little bit, I'm sure we could find it. Yep, right there. Got this bullish order block. We're 7 minutes away from the open. Actually, give me 1 second. I'm going to run to the bathroom real quick. Hey, I'm back, you guys. Can you hear me? Throw one in the chat if you can hear me. Crap. hopefully nothing's messed up. We got 5 minutes till the open. Just throw one in the chat for me real quick. Okay, good. Okay. You never know with live streaming, right? Just never know. All right, cool. So yeah, after a large range, either a small range can happen. Your expectation should be, though, to target something like this. The logic is because you want to see them purge liquidity. You need to have counterparty to your trade. Smart money does too. So if they're going to rally, right, we're going to continue this market maker buy model, then we want to see something like this taken out. The deeper that you get, though, like in second stage distribution, there's only been really one here. This is the only distribution here. Well, ICT, he would say this is distribution, and this would be accumulation going to the buy side. I just classify everything as, the left side being accumulation, right side being distribution, right? Distribution is generally selling, and accumulation, when mentioned by ICT, is buying, right? So that's why, you may hear him sound a little bit different. I try to make it even easier, right? So you don't have to remember the difference. It's the left side is always accumulation, right side is always distribution. Right, terminology-wise, I may be incorrect, but it made it easy for me to understand, a little bit easier. So hopefully it makes it easy for you too. But yeah, so we have this order block here on the 1 hour. So let's see what happens when we tag these lows, if it can tag the lows. See if we can't get price to give us a sweep, show respect to this order block, right? The 50%. I can say that if it breaks the 50% of this order block, our intention is going to be to target this down here. But I think we'll be pretty safe with this. So 50% of the order block. Okay. So yeah, we'll keep that in mind going into the open here. Oh, nice. Tony, you took that short, huh? To target the lows here we mentioned? Okay, I see. Yeah, that would have definitely been enough. A little bit outside of things that I like to engage, but hey, nice independent thinking, brother. So yeah, let's see what happens below this low here, right? You took one on gold too? Oh, you've been up. Oh, okay. That makes sense. See, it's kind of the same across the board. We do got this SMT that does encourage what I just mentioned, how the large range took place. With SMT at the highs going into New York, it's really reasonable for them to want to come down, target some of the relative equal lows that are left overnight. Or from, yeah, overnight. So London's low is here. Purging out London's low is totally rational. All right, so we just took that out. So now we got to see, right? We have low, high that took this high, lower low. Let's see how it treats this when it trades into this. If it respects that and then we start targeting that order block, the 50% on that 1 hour, then again, we have to look at this this level here and see if a model that we like can show up. Yeah, that's a pretty sizable move. Very reasonable. Well within our expectation. I'm curious to see how this is going to be treated right here. Because now we've purged liquidity out. Still above the 50% of the 1 hour order block. Higher time frame is still looking like it's bullish. Remember what I said, right? If this has an order block that's formed after we shifted market structure here or changed the state of delivery here, I think also, yeah, change in state here on the 4 hour, right? Once we sweep that, if we can respect this, we can then see price going higher and then try to spot something running to the buy side again. But yeah, this SMT here makes this reasonable. Because there's no news, I don't take trades before the open. That's just a rule I have. Doesn't mean you have to follow it, but it's just something that serves me well. Because I know that the most, at least in the past, the times when I've got it wrong the most, but was overall correct, was before the open, especially when there's no news. But we just, mentioned this. So if you found a model of yours that fits this, it's pretty nice, right? We got the regular trading hours gap, 50%. It's now cleaning the whole floor right now with that delivery. So yeah, why is this aggressive right now? Because again, yesterday had a very, very large range. So they want to pull against that. That's what we want to see in general if we were trying to be bullish, right? It did kind of break through this 50% here. So we got to be pretty aware of this and see how it treats this. We have this low here to the high, and then the lower low. We may see this turn into a bearish breaker, like I mentioned a second ago. Could be the case, right? That may result in, if price returns into it, and then we get another leg to begin, we would then look to target this here. Oh, nice. Mike took it. He took the idea that was mentioned. Good job, bro. See, this is exactly what I try to cultivate, that independent thinking. You know, I'm not here to put you in trades. I'm not a financial advisor, but I give you enough information that you can end up making a determination. And you stick around long enough, you get comfortable with the process, right? You start to make these decisions on your own, you know, and you do what you will with that information. I'm not telling you to do anything, right? But, you know, when things work, you know, it's pretty enlightening, that's for sure. See, Mike. Sheesh. Jones smacked it too. Nice. Yeah, we've just been absolutely smacking everything. It's just so much. It's amazing. But yeah. So Joan took that trade. That's amazing. Beautiful. Wrote it all the way down. So yeah, we'll see what happens. Like I said, if we were to break the 50% of this, our attention goes to this. We just haven't really had much of a retracement for me to engage. So shout out Tony here on the live call. He also got behind the move we called out. Right, good job. Right, you take it upon yourselves. Right, I didn't call a move. You chose to take the framework and do what you will with that information. You know, you have to make decisions on your own. I give you kind of like a forecast, what I believe is going to happen, and you know, unsurprisingly, it's correct more than it's not. But you won't know that unless you spend time here, right? You got to spend time here. You know, one video, it doesn't do justice because we have a whole process that goes into things, and not every single day is a perfect trading day, right? I'm not a wild gambler, and I'm not teaching you to be wild gamblers. But there's a move that we can call out and look at every day, especially in my private group. It's even more apparent, right? Because we're live every day. And I have some private group students here too that would tell me I'm a liar if I'm not telling the truth. But it's the truth, you know? So it's amazing. Great job, you guys. Joan, great job, Tony. Mike said he posted it. Let's go see what Mike did. Whoops. Look at that. Beautiful. Beautiful. So that's 3 traders that have been on the call, that heard what I've said, that took it upon themselves, given the fact that they understand the process. And, you know, you see what it is. It's for the millionth time, right? But again, there's no guarantees. Just because I or anyone else does it doesn't mean you're going to be able to. It's going to be up to you how hard you're going to work, how you're going to use things, you know, and whether you're teachable, whether you're disciplined, all that stuff is going to be beneficial or not beneficial, right? Like if you're not a disciplined trader, doesn't matter what you learn, you're going to get blown out. So yeah, let's see what happens. I've chosen to wait for the macro, right? So sometimes we miss trades. It's okay. But yeah, I'm glad that you guys got the, or that you felt confident in what was shared today so far and took it upon yourself, assuming that your model's there and you followed your rules, didn't just, you know, go off what I'm saying. You guys engaged and had a good time. Good job. Yeah, hopefully it makes sense why this has happened here. I laid it out, why this could be a likely scenario. I did kind of want to see how I was going to treat the lows here, but clearly we blasted through. Even if it did sweep this, there was still an offered move in here to simply target that first and foremost. And, if it was to hit this, like sweep this like it has, and then turn around, right? And say you took a short there, and then it turns around and starts to get back in line with some of the potential for upside. You can kind of see how mapping out both sides becomes not that complicated, right? We use the context of the previous large range leading to AM session likely either pulling against them to go higher or just simply, turning around entirely or consolidating, just to have like either consolidation, deeper retracement, or the continuation, all under the guise of the behavior that comes after a large range from the previous day, large range from London, which we didn't have, right? So the London session seems to have not really done much. It did move a little bit, but it didn't really do much. And then, of course, this comes in. We don't have any news to help justify this move. But just the simple fact that we had a large range from the previous day, it's more likely to retrace first if it was to go higher or consolidate. Not just like, there's no thinking of, okay, it's a large range yesterday, let me get in and buy right now because I'm missing out. That's how you get your behind toasted, okay? But yeah, like I said, once it takes this out, 50% of the order block, our attention immediately goes to here. Was I correct in that? Right? Was the analysis today overall correct? We also have SMT here, like I mentioned earlier. So all of this that we've talked about justifies this sell side delivery, right? Tony, if you can post your engagement too in the Rising Star section in the free community. Oh yeah, you did something yesterday too. Amazing. You're having a pretty good week, Tony. Proud of you, bro. Good job. It's not a surprise though. Just another day on the job, right? Same old, same old. Same chart, different day. Same process, different scenario. So yeah, it seems like we are in fact going to blow this out. All right, we'll see what happens. Very nice move. If we take this high and that high, we can see there's that SMT there as well. And the Dow is accelerating. This has me very skeptical about this decline in the indices, especially if we can get the S&P to accelerate. Maybe it breaks this high here. If it gets up above this high, the Nasdaq's going to have no choice unless they're going to stay cracked in correlation. But eventually, it's going to move. Yeah, Tony he did some wild stuff the other day. Absolutely crushed it. Tony's been doing phenomenal. Literally just a YouTube student. Shows that there's not only value in my private group, which you see 2 of my private group students just shared trades, and 1 student that's just on YouTube that shared trades based on the analysis and things that they've learned, decisions that they've made. It just shows you that this stuff is just incredible. It really is. Whether you're just a YouTube student, because maybe you can't join the private group, or maybe you don't want that one-on-one element or access to that community, or if you do want that type of access, there's more support there. Not everyone needs that amount of support though. I don't encourage everybody, right? Because you have to be serious. Because I don't waste any time, and I spend a lot of time on the students in that group. So I don't want to feel like I'm wasting my time with students that are wasting their own time because they're not serious. But if you are serious, that is an option. I have a QR code on the top of the screen if you wanted to scan that, or look in the link in the description. But if not, YouTube family is the support on YouTube and the YouTube family is much appreciated. So hopefully you guys get value. I mean, there's no way you can't get value. We do this every week, and same stuff unfolds all the time. There's no guarantee, obviously. It's not perfect, but I think we do well for ourselves. You see this Kraken correlation? It has me very skeptical about what the Nasdaq's going to end up doing. The Nasdaq does have that failure swing, so you can see the reaction from that. Jeez. Sheesh. That's a nasty decline. Holy crap. See the S&P accelerating? How at the same time, once that happened, this started having the okay to accelerate as well, even more. It's just a real-time example of how influential the S&P is. But yeah, dang, that's wild. I didn't think it was going to be that aggressive. It's kind of been the case, though, from last week, especially this week. We just opened up out the gate over 500 points, and then yesterday was what, 600 or more. Now today we're coming back into some of what happened yesterday. Again, we do have this Kraken correlation, so it's kind of a concern. So again, I'm waiting till the macro. We just hit, or are about to hit into the macro in 1 minute. 6:45 to 7:15. So we'll see if there's something we can engage. It's been a pretty fast-paced move here. It's unseated all these traders for sure. Definitely left these equal highs up here though. So we'll see what happens. It's a wild swing here, up and down. I mean, geez. This high here to the low, right? We have sell side, buy side. It's kind of the same thing in here too. But we've pretty solidly punched through this. So if we take this high up here to the low, we have 50%. But if we take this high to that low, we don't want to see price break down below 50%. Otherwise, this may not be a very trustworthy idea to even consider buys anymore. So yeah, that initial move targeting the sell side here. It's definitely a great option. It's outside of my rules though, so nothing for me yet. See the chat. Says I'm out there in the news. Yeah, there's no news. Yeah, Mike, you're right. Let me see. Jones said, we reject the consequent encroachment of the daily suspension block. Yeah, the one that we mentioned the other day. What else is in that area? We also have this inversion here too. Kind of went through it. Staying above it would have helped support this continuing going higher, but now that we've closed well below it. So this could easily just be a retracement. We're back inside that 8-hour, or well, in this case, 16-hour bearish order block. It's also an 8-hour too here, but it kind of blew past that a little bit more. But as we move up, we could see clearly the 50% of that has been respected. If this was the 5-minute chart, we wouldn't be overwhelmingly looking to see this go higher. Again, we are inside of a range-bound environment. It could just bang around in here and kind of just act like an issue. Yeah, so with the conditions that we see so far, again, you want to make sure that you are being very limited. You're knocking down the 20 to 30 points. Yes, this move was offered. Yes, we were able to identify it before. I was just simply looking for these to be targeted and then observe what the reaction would be from that, right? And in this case, right, if it returns up into this, doesn't even, try to get even deeper, and then we get another beginning leg going to the downside again, we may be in for a sell model. Like I said, could be the case if the buy model was to fail. At the moment, right, it's still not invalid yet for this to be a possible continued bullish move. But we do need to have it get back in line again before we consider any buys. From what high did you calculate the 50% level that determined if we should still? So the 50% level isn't the thing that basically lets me determine that it's a buy. If we go from this high to this low, right, this is the market maker buy model potentially. So this 50% level for a buy model has to be respected. If it creates a buy model scenario and then it gets well below it again, that's a problem. And then it may be telling you that it's going to go to a sell model. So then you'd have to frame out this idea, right? But this is simply looking like it may just be a retracement. Wipe out these lows here, especially if DXY declines, just so we can recover and go back to the buy side. You guys see also what's in that level? The 25% of the yearly wick. We also have some new week opening gaps in there. So again, if we get this happening, and then we get price to return into this, and then it creates another decline that basically creates another bearish order block, right? Say it creates something like this. It's another candle, like a bullish candle, and then the next candle immediately breaks through it. That's enough for me to think, okay, that's a part of the distribution for this sell model instead. And the 50% from the larger range, right? If that also is getting invalidated at the same time, you can start to see how price is telling us it's time to like transition, right? To move to the other side and do not demand too aggressively the buys unfolding. So yeah, hopefully that makes sense. That's a good question. Reverend, nice. That'd be awesome if a pastor's here, right? I would really enjoy that. The buy side liquidity get taken to fill in that 8-hour fair value gap as well. It plays out, but how we want it to be. Yeah, we'll see. We'll see what happens. Wait, you're talking about this 8-hour fair value gap? Ideally, this 8-hour fair value gap up here does not even get traded to, because we already have a large wick here overlapped with a displacement if it's going to be bearish, right? If it does get traded into, it's just one of the more clear signs that order flow is not going to continue bearish, because this should be a balanced price range. If it responds from here, look at what it hit. It hit the low of this balanced price range. So if that happens, plus we get below the 50% here, and then we map this out, and then we get below the 50% here, that's a very, very strong indication that's going to target the sell side, and there's no need to even consider buys again. It starts to unfold the narrative, unfavorable to buys and then favorable to sells in that instance, more long-term. This is how you read order flow and the language that's being presented to us, and how, like ICT says, price is all you need. It's telling you such a detailed, in-depth story that you just have to understand the language too. It's like someone speaking Chinese and you don't know how to speak that language. Until you learn the language, you don't know what they're saying. It's the same with price. Price has a language, it's speaking. ICT calls it, or has named it, smart money concepts, right? And that language becomes very clear once you know the components, once you get taught or spend enough time learning on your own over years. But of course, having a mentor or someone that's done it, that proves it like we do every week, every day in my private group, you can imagine that the more repetition you can get with someone that does know what's going on, the faster things can develop. The easier you can understand like what's important, what to focus on, what roadblocks you should avoid, what roadblocks are even there that you may not be aware of, and then how to overcome them. It's going to be the forever benefit to like shadowing someone. That's why my private group is an apprenticeship, because students are shadowing me. They're watching me do it live every single day, in the best conditions and the worst conditions, when order flow is one direction and then when it transitions and everything in between. And it's a very repetitive process. So you have no choice but to give value if you're paying attention, and you're allowing yourself to be coachable, right? And you consider the things we talk about, right? But yeah, so again, I'm looking to see, because I marry the higher time frame, I'm looking to see what's going to happen in here, right? Because we're now retracing back down into this. It's also a pretty nasty response from this order block here. So if we start, again, pushing through those lower levels, we could look for a potential longer term short. Ideally, DXY is going to continue to run higher if that is going to be the case, if we are going to drop lower. But I let price come to me. I don't go to price. Price has to come to me. And if it doesn't, I just wait. And I look for the best moment to strike. But that initial entry, it's something that, could have been considered. You guys know that on FOMC weeks, NFP weeks, any weeks that have these crazy news events or like a shutdown and all that, I'm not aggressive at all. So in my opinion, for me personally, for my style, this move, although we called it out, for the way that I do things, it's a little bit aggressive for me to engage. But obviously, that doesn't mean you can't be aggressive, right? Because clearly it worked out. Clearly we know why it dropped. There was a lot of reasons why that could have been trusted. And that's, why there was a couple students that took the trade, which I'm proud of you guys for the independent thinking. Like I always say, you're not here to be a carbon copy of me, ICT, or anybody else. You're here to be the best version of you, the trader that's you, because you're the one that has to put on the risk. You're the one that has to determine where price is going to go. You're the one that has to have the trust in whatever your opinion is if you're going to do this full time, long term. It's not because someone's helping you or teaching you. It's part of the reason in a lot of ways. But over time, it's going to be you, unless you're just, copy trading somebody. And I don't really allow that, right? I want you guys to take it upon yourself to do it. So yeah, this is a huge decline in here. It's yet another big 500-point range. We've already ran 300 almost. Yeah, 300. So yeah, let me move up a little bit. Okay. So again, we have now, I believe, strongly breached the 50% level I mentioned. It's going to require a lot for price to get back through the buy side. We have S&T at the highs here. So left that. It treated the balanced price range that we talked about that held this move up and allowed us to continue to determine down movement. It's now respected that again. So it's like a brick wall, right? This whole area in here. Do you see how price has been extremely sensitive to that? Right? That's a telltale sign that although it came all the way up, we have that second change in state on that 16-hour chart, right? Which is a higher time frame, right? Same thing's true if this happened on a daily chart. We have one change in state, second change in state. We have a large wick. It's traded up multiple times and refused. The buy model 50% from this high to that low has been disrespected. These levels that should hold price to go higher, supporting the buy side delivery, have now been violated. Do you really want to force buys in the face of this? No, right? You want to look for something that fits your model inside of a macro now, supporting that higher time frame view, right? Depending on what your model is, right, you maybe could have spotted something in here, right? In terms of continuation, once this got violated, the inversion, that's reasonable, right? Especially now that we've broken through some of this. Chris, on the 1 minute, there's an implied fair value gap. If it was there, was a razor. Yeah. So you said on the 1 minute, let's go see that real quick. Are you referring to this right here being the implied fair value gap? Remember, it's got to have a wick, a body, and then another wick that trades into it, and then we push away. So that when it returns back into it, you take 50% of this wick, 50% of that wick, and that's an implied fair value gap. BPR or the implied fair value gap. So yeah, this right here is the only potential implied. It's kind of a sloppy one too. But yeah, other than that, there's not really much of a, yeah, there's no implied fair value gap inside this delivery. Oh, you're talking about right there. Oh, nice catch. Yeah, very, very small. Damn. I barely saw that. Yeah, you're right. Trading through that plus this fair value gap here, if we trade into that, that's definitely a sensitive level. I didn't even notice that. It's so small. Yeah, if you go down to like the 15-second chart, all right, you'll be able to see, okay, runs on stops. I would have preferred it to take this one. We have a breakdown, return into this inversion, and it respected it. Once it broke this low, that's enough to spot an entry. You see, ironically, it offered another opportunity there. So again, we're looking for this to be now a potential sell model. I know a lot of you guys don't use the seconds charts, but you know, the better you get with the higher time frame, the easier the lower time frame will become, even on the seconds. You spend enough time here on this on this channel with me, you will get really good at many different things. Maybe you won't like the seconds charts, but it opens up a whole new world, and it's no different. It does the same stuff. But yeah, what a move. So yeah, let's go to the 15-minute. Oh, I see what they're reaching for. So there's this run higher here that's inefficient to the sell side. This is the previous day's regular trading hours gap. It had no sell side delivered into it. So what are they doing? They're targeting it. That's something that I missed this morning. So that regular trading hours gap, notice how there's no down candle, but there's up candles. That's inefficient price delivery to the sell side relative to the regular trading hours. So with this decline, it now makes even more sense why they're so aggressive to get down there, because there's that little gap, right? Of course, I would have still waited to try to see if we could violate the lows and all the analysis that we did this morning. But now taking a short into that level makes even more sense. The regular trading hours gap is in here. It's also a 15-minute fair value gap. It's buy side, now sell side. Let me tell you this. On the 15-minute chart, us inverting this 15-minute fair value gap, what does that become once it breaks through it? What can help us trust that this will continue to go lower relative to this 15 or this one? Is it a 1 hour too? Yeah, 1 hour fair value gap as well. What about this up fair value gap and down fair value gap allows us to trust that if it gets below it, we should not go back above it? Yeah, Maddie, regular trading hours gaps are magical. That is for damn sure. Joan said it right. Yeah, it's a balanced price range. Overlapping fair value gaps are balanced price ranges. Same thing here too, right? Started off there, overlapped it. But yeah, given how wild price is, it's really good to be very conservative and wait. Because I mean, this is just everywhere. Nobody's able to stay in price for long term. So they're wiping the floor with both sides. Remember, big institutions don't trade really on the seconds chart. You know, they're plotting entries on a larger scale for a longer period of time. So that's why things take, you know, quite a while to unfold, because they're going off the higher time frames. And that's where the big liquidity is at. So the big game is being played. So yeah, we're going to take this 1 hour. We're going to continue to monitor that. So let's see if we can't get this to be respected. If this is going to be bearish, we will not come back up into here. This will be a breakaway gap. It's got buy side, sell side. There's no reason for it to have a deep retracement. It had a little one, yes, right? I think that's just part of this potential market maker sell model. Right, and then, you know, if this was to fail to deliver to the low, maybe it gets back above this 1 hour fair value gap. Then that'll set the stage for us to possibly look for the buy side again, which I'm not really behind at the moment. Still looks like it's going to drop because now there's a shutdown. So that's probably part of the catalyst pushing this lower, even though there's no news. The shutdown's been really hammered home the last 24 hours, how they're not going to agree. So after a large range day, think about how this lines up with the news. The shutdown's being shoved in our face. We had a large range previous day. Large ranges lead to small ranges or reversal to continuation, or, you know, if it's going to continue to drop, you know, it'll rapidly reprice against what happened yesterday, right? But with the rally up, you got to wait a little bit, wait for the things we talked about to really confirm, which it, you know, at least for now has pretty solidly confirmed. You know, so we'll see how it treats this. Again, if it gets below this, there should be really no real issue for it to take out this low. All right, it's been a pretty large range, so expect that there may be a little retracement. Watch this fair value gap. If we take this high out, that may be a problem. That may result in this just simply being a wick through that lower 50% level I mentioned from the larger buy model. And then it'll potentially trigger us back to the buy side. For now, we're not looking at that. We're looking at shorts, right? And then we're going to watch how this behaves. I want to see if this can be traded through. Yeah, gold and silver are not really doing anything, so stay away from that. Still have a pretty nasty correlation in here. The S&P is definitely going lower, so that's what's, you know, exaggerated this move here, plus the failure swing. That's what made this the larger sell-off in the Nasdaq versus the others. Whatever the S&P does, the other two will eventually follow. So for whatever reason, the Dow is still staying stronger than all of them. It's been like that since November. I'm not too sure what the catalyst for that is. Maybe it's because there's less stocks and it's just more positive news on those specific 30 assets, I guess. I'm not sure. Yeah, this is that 1 hour fair value gap. So let's see what happens. Again, if you're looking to take another short, you want to see a retracement first. And then on the lower time frames, right? You want, well, higher time frame levels like 15 and above or 5 minute and above, you want to see a PD array met. Let price run into them. And then inside that retracement, anchored in a higher time frame than the seconds or 1 minute chart, you want to find your model performing continuation wise. And that's how you will be able to get into continuations with your model. The first move set up, maybe a second one set up. Well, if it's not done and there's going to be something like, you know, the sell model continuing, any type of retracement into those larger PD arrays should be able to result in continuation. Got a fair value gap here. Let's watch how that inverts if it does. Okay, there's that inversion idea. I could tell you that if it gets below this fair value gap here, it should be able to potentially accelerate. We have had a lot of movement already, so it is risky. Oh, what the hell just happened? But yeah, we'll see what happens here. It definitely looks like it's not interested in doing much buy side for now. You know, eventually it's going to retrace at some point, but getting below this, it may supercharge this market maker sell model. Again, all you're looking for is 20 to 30 points if you are doing anything. That's the default at all times, especially on weeks like this. What is that? Non-farm payroll report originally scheduled for Friday. Yeah, I know. Yeah, told you. It's going to be the same thing as the last time. It's going to refuse to give us the data that we need or that we want for the news. It's going to be a lot of shenanigans. It's to be expected. Just lower your risk, you guys. Don't be doing anything crazy. So yeah, again, now we've hit the low of this. So we'll see what happens. Again, it's very risky to try to take something that's this deep. It's already ran hundreds of points. It's very, very risky. It's better to wait for a stop run first. You know, and let the missed move be a missed move. If you end up seeing it just completely continue. With no stop run, you have no opportunity, no setup to even look for. Got gold rallying. What's DXY doing? DXY is kind of giving a turn real quick. And we got a little SMT at the lows here. I wouldn't be surprised if they try to take out this high right here. Wouldn't be a surprise. See, because of the lack of sensitivity in here, this is unreliable. Right, so hypothetically, right, if an entry was taken by me, more than likely I would have closed the trade. But if I would have taken a trade from up here, I wouldn't attempt it anymore, especially because of how large your guys' trades have been. I wouldn't even risk it. It's too risky. Secure that. You know, we called it right, and we'll see, right? If you do get into something or want to eventually, of your own decision, I would encourage you to wait for a stop run first. Wait for your model to form, then look to do something. Otherwise, let it run. Right? So now it's starting to look. Well, it looks a little okay. We'll see. Again, there's nothing in here that I would want to execute, just simply off a fair value gap. It's just not how it works. I would require this to take this out first, then I would look to try to do something. Right, and it may very well just continue to smash, especially if we get below this. I highly doubt they'll try to get beyond. Maybe they'll try to do something like a retracement later on, but this will be a balanced price range. Right, why? Buy side's delivered over here to the left, and sell side's now pumping below. Right, and then once we get below it, if we trade into it and start pushing away, that's how you can confirm or know for a fact that that's a balanced price range. OB Frenzy. Are you Sebastian from the private group? I'm not sure. He's got a similar name. Yeah, nobody, don't be too concerned about this shutdown. It's not the first time. We traded through the other one. It's probably not going to be the last time, unfortunately. It is going to be something that makes it a little more hectic. So you got to be more disciplined. You should never, being here, you're being told, never overtrade and over leverage, ever. If you do, nothing I tell you is going to work. It'll work for a little bit, but then you'll mess it up. Anyone that you learn from, you'll mess it up if you do that type of stuff. So I encourage you, as much as I possibly can, to not do these things. Please don't do these things. You're making it hard for yourself, and you're not going to let this stuff work for you. It will be impossible if you do that. It's impossible for those types of people who just refuse to be disciplined. All right? So please listen. Please. I wish someone made this clear for me. Yeah, it looks like that actually it did end up being reliable in there. And once it closed below this, right, and give that wick, it's a pretty good sign that it was going to hold it, at least for a little bit. Obviously, it's died down now, right? You kind of see how it was very fast. Now it's dying down. It does that on purpose. It does all this stuff on purpose. Because just think, with the fast movement, everyone that just hops on the chart, they think, oh, I'm missing something. When they're not missing anything, right? You just wait. And if you go chasing price, you're going to be missing the money that you lose or the accounts that you blow. There's no reason for it. Hey, do you guys have any questions? I'm happy to answer any questions, concerns. Do you have any difficulties? Anything you guys want to maybe talk through? Everything that we've already talked about on the chart is what is on the chart. There's really not much more to talk about. So yeah, watch the low of this fair value gap in here. So we may get a little bounce in here. Remember, I want to see highs taken if I'm going to look to try to engage again. Just like to find an opportunity. So if you look on the left side of the chart, look at where we're at. It's 25% of this gap in here. Yeah, I guess it's a good thing that you guys don't have any questions. Hopefully that means that everything's made sense to you. Hopefully you guys have been doing well. So this right here, this little behavior, right? This retracement, drop, it fails to break that low. Price retraces and then takes out this low here and then immediately runs rapidly to this fair value gap here because it was so close to that. This little piece of price action here, if you go back and back test as price punches into levels, this is what ICT calls an algorithmic rebalance, right? It's when price is almost to a level, it stops, does a retracement real quick, aggressively runs, fakes people out one more time, and then it immediately smashes back to where it was initially headed. It's called an algorithmic rebalance. He's talked about it on one video. I can't even remember what the video was. I just remember him talking about it. Put it in my notes, which I should have taken better notes. I just took the note itself with a example of what it looked like and didn't put the video. Right. I should have. But hey, it is what it is. Just know that that's a thing, right? Maddie said, I got my bag for the day. I'm out. Not going to tell myself. Yeah, no worries. No worries, Maddie. It's the best decision. You know yourself better than anyone else, right? So, yeah. So good job, Maddie. Yeah, what a great day. Beautiful run. Tony out here being spectacular. Tony. What the heck is this? I think it's there for like nostalgia, right? I'm not sure if you use that. But Tony, that's not needed. Any of you guys that use anything else? Those things aren't needed. They're just distractions. Sebastian. We've had some amazing success in the private group. One of the WMG Trading All-Stars, Harley. One of my longtime students is finally breaking through. Sebastian, look at that. And then immediately gets it. Maddie, who just hopped off. Beautiful. These traders are something else, I'm telling y'all. For a small community, the results that are being pumped out, I mean, it's just, how are you going to deny this? Are all these students lying? Right? Are they all just, is this all fake somehow? I mean, it's insane. It's just incredible. It really is. I've been doing this for so long too, since 2022. Well, 2021 with this private group. Things started really picking up with student results after a year of me teaching and them learning from me. Because you get such a nice learning experience, because I don't pull you away from ICT. I'm a purist. I don't use anything outside of what he teaches, but I've done it for a long time, right? charter community is something else, right? But you could just see who knows what they're talking about, who doesn't, by the results. Not only from the person, but the way that the students operate. And I'm very grateful to say that, the things that I've taught, the way that I teach these concepts, how I help you guys and guide you through these concepts, I think it's undeniably effective. We've got a stop run here, low, high, lower, low, higher time frame PD array. Now price is pumping still. We've now gotten below this. Let's see if I was correct about the fact that when we get below this, we may see acceleration. See what happens. Seems like I was right, wouldn't you say? Wouldn't you agree? Seems like I was right. Can't say I'm surprised. Can't say I'm surprised. Hopefully by now you guys aren't surprised either. It is kind of surprising no matter what. It's just like, really? Like, this is really what's going on? Like, we could really do this? It's kind of a shock, really. But this stuff works. So it is what it is. That move from that fair value gap offered 70 points. I would have preferred to see it run this first like it did here, but a little more aggressive. It did work out. It's breaker here, low, high, lower, low. About 90 points. See that daily fair value gap, SMT, failure, balanced price range, massive displacement, failed market maker buy model. So yeah, let's see what happens here. Remember, you're only looking for 20 to 30 points. With how fast this is, a retracement can happen. It's been so rapid. Look at that. We should not try to get above this 1 hour here, though. I'd ideally not want to see that if we're going to continue to go lower, because we basically completely filled in this fair value gap here too, right? So ideally, if we're going to continue to go lower, we don't want to see any of this upper movement taken out. Go to the daily chart, look at it. It rallied up, price hit this daily bearish order block on top of everything else. Order block, fair value gap inversion with a rapid reaction away. So now the objective, target-wise, right, we have all this. And again, all of that can be encapsulated inside the potential for a market maker sell model. Does that mean we can't get up into this, maybe stop some of these people out? Ideally, we don't want to go too deep. But even if it comes up above this, we're still below this 1 hour fair value gap. So we should be able to continue to trust that this is going to hold us to the downside. So we'll see what happens. Yeah, this move here, slow move here, kind of thought about the fact that I said when it gets below that, it should be able to accelerate in some form. Gave us that, but it came kind of right back. So on top of the fact that it's such a huge range, it can't go down forever. So at some point, it's going to turn a little bit. You know, where's it going to turn? Well, we have these equal highs here. Stops are right there from this whole sell-off. Would it upset things if it rallied up above that, tap that, or tap this? Continue to respect the 50% of this inversion fair value gap? And then look to decline, offer another leg lower after it does that? Simply to scoop liquidity first, then go? That's how they operate. That's why you want to stop run before you look at anything. Because you want work to be done. You want them to take stops. We have the run lower here. We now have an overlapped fair value gap. If it trades into this, and then we get displacement through that, that puts us in position to think about these highs here early on. Underneath the whole view of the fact that we may have just retraced after the displacement, retraced, and then started to take another nosedive lower. Right? So if it does this, right, if we see on this time frame, or any other time frame, right, if it does something like this, if it goes lower into this, these are overlapping fair value gaps. If it's going to hold this and it is going to be a retracement, we have this high, low, high. If we get a failure swing here that takes out this high, that's enough for me personally, even though this may just be a buy side retracement to go lower. That's enough for me to frame something in a counter trend view, assuming that, you know, this is going to keep going lower. That's how you can trade a counter trend move. So this high here, watch and see. If this high is taken and this is a failure swing, these are a balanced price range. So let's watch and see. Again, we do have this 1 hour fair value gap. This could stop it from getting up there, right? But if this is taken, that turns off the interest to want to catch a continuation lower until it takes something like this out. But if not, right, if it doesn't do that and we invert this fair value gap, if it trades into it, that may be enough to catch continued move lower if you like inversions. Getting below this is also potentially a bearish order block. Yeah, right there. Just did trade into this wick a bit. It's kind of something you want to pay attention to. Definitely want to keep that in mind. Those are going to be levels where price could stall out a little bit. Daily wick. So yeah, hopefully all the decisions that I've shared today, hopefully they all make sense. I got broken fingers and I'm still here, by the way. I was here on Sunday too. Nothing's going to stop me from doing this. It's the type of stuff, like if you get hurt or something, it's what makes trading even more worth continuing to do no matter what, no matter how hard it is. Because if you get sick at work, you can't go to work, or if you get hurt, you're not going to make any money. You have a limited amount of sick time, and that runs out very quickly. So my hands got crushed inside of a door, basically. The door was stuck. I tried to yank it open, and the thing just completely smashed the very tips of my index, of my ring finger and my middle finger. That was brutal. Like, dude. It was brutal, let me tell you. And I've had to try to adjust to being able to click. I'm surprised I'm able to do this as quickly as I'm able to do it still. But it's brutal. Freaking brutal. But again, another reason why I'm grateful that I never quit trading, no matter how hard it was, no matter the fact that I lost all my savings, no matter the fact that, you know, if I didn't have some help, I probably would have been homeless. You know, no matter that I had a chaotic situation with my child's mom where we lost our apartment, I just kept trading. Didn't have money at times, but I kept trading. Fast forward now, that'll never happen again. It'll never happen again. I could lose everything and make it back. May take some time, but I know the light at the end of the tunnel is still there because I have this skill set. And that is a freedom that can't even be put into words. A feeling of just like self-sufficiency that you cannot even put into words, honestly. I couldn't be more grateful to be blessed. That's why I try to pass it to you guys. That's why I like doing this. And I'm public. I try to teach everybody. You know, I'm not the best trader, but what I have works. It's just ICT concepts used in the way I use them with the recipe I've created, specifically from ICT himself, nothing else. We have the ability to create our own recipe, right? And you notice that every ICT trader doesn't trade the same. They're just a little different model, different approach. But as long as they're within the realm of ICT's logic, he allows us that ability to create our own recipe and feel confident that it's ours, unlike anyone else. You know, there's similarities, obviously. But again, he affords us that ability. And I try to get you guys to still have that opportunity. Luckily, I trade 4 models. So I have built models for other ways of trading, swing trading, and I use other PD arrays and all these things. I just have what I like. Once you know how to build a model, you're able to use any of them. You can create a model all the time until you find something that works. But the question is, how do you build a model? Right? What are the components that are needed? And that's something that I teach. My whole process in itself shows you, you know. But that's another reason why I fell in love with these concepts. You get that ability. You can't say the same for other styles of trading, especially if it has an indicator, which is insane. It's late data that you're seeing on the chart. You know, people succeed with them still, but I couldn't. Most people can't. And they don't give you the why something should or shouldn't happen, and why you can trust it. You know, they don't give you that. Everything's random, guys. That's what they think when it's not. But yeah, just a reminder, if you guys have made it this far with me, don't forget to like the video, subscribe to the channel if you haven't already. I encourage you guys to keep showing up. I know a lot of you guys do, but if you guys are new and you liked today's call, I encourage you to keep showing up. There's something to learn every single time you hop on these calls. I make it a point to give you guys things that are applicable right away. Maybe not so much you're able to trust it right away, but the more that you see it unfold, the more that you see me talk about things, and the more that you study ICT's concepts, the more that you see it play out in real time, right? That's building reps. And just like a relationship, every element to your trading plan requires trust to be built. Just because you get a piece of a concept, like an order block or a fair value gap, doesn't mean that you're going to be able to trust it real time, right? When does it happen the most? the most reliable? How do you use it? When do you not use it? How do you validate these things? Where's price going to go? Why? That's like the number one thing you got to figure out aside from risk. Where's price going to go and why? And hopefully, with the very clear process that I lay out every week, and then of course every day in my private group, hopefully you guys are starting to see that, because I prove that we're right more than we're wrong. And even if we have an initial objective like this, right? I wanted to see how it treats the low down here. We have ways of adjustment, so then we can, in a trustworthy manner, look to go the other way. Or which today is no exception. We did it today too. Said if it breaks the midpoint of this, it'll likely target the lows down here. Right? And we kind of blew past that entirely. I said that if we break the 50%, so that if we break the 50% from this high to that low, we would then have to transition from this being a buy model to now a sell model. And then we would take it from this low to that high and treat it as a sell model. So that if it overtakes this 1 hour fair value gap, I don't want to see it get above that. And if it does, it may kick back into bullishness, and this will have just been a manipulation, right? But as long as we stay below it, we still have a chance to keep going lower. We've laid out new targets. If that is the case, if it stays below this and confirms by trading into it maybe, but stays below the 50%, that's a line in the sand. 50% of this, I don't want to see it come back up. It doesn't have to. We have buy side, sell side. If it's gonna drop, yes, it may have a shallow retracement. We should not get exaggerated and come all the way up here. With how price is nowadays, there is a chance for it to do some wild stuff. Plus a shutdown. I mean, we have a lot of things. But typically, what I've just laid out and explained and always explain, when this happens, it should not trade through that. We should continue to reliably see downside. And again, it was a process to get here. At every step of the way, we had a process. We had a framework for a short if you trusted shorts. Buys have not been in favor at all until something, would have kicked in line, and it never did. So did we call a buy? No. It's only been shorts. The question is your model there? Because I can't decide which model is going to work for you. I have 4 models that I use, right? 2 that I've created using ICT's concepts, stuff that he's never talked about. Pieces of information that he's taught, I put them together as a model because we have that ability to do that, because he affords us that ability, right? He probably uses it, right? The things that I teach my private group, the 2 models that are special to our group, he probably uses it. It's probably something that he does have. They're blatantly obvious things. So there's no way that he doesn't use them, right? But maybe it's not his, maybe it's not something he wants to put publicly. He has 81 models. So I would not doubt, given how consistent the personal models I have are, I wouldn't doubt that he's using the same thing too. When you get experience, and again, you understand how to build a model, like what are the components? What does that look like? Once you understand that, you're able to then pick and choose different tools that he provides us, and then you can put them together into your own recipe, your own algorithm, your own trading model, without being a sleazebag, renaming it and saying that you've discovered it and you didn't get taught by anybody and all this other nonsense that these people do. ICT deserves the credit, and there's no issue giving him credit, at least from how I see things. But hey, to each his own, right? But yeah, so now we're inside the 750 macro now. So all of this has happened. Like I pointed out, it did offer 2 extra setups, right? It offered this one from this inversion. And then it offered this in this little delivery when it traded through. It also offered it when it came back in here. This is a breaker, right? Low, high, lower, low. Smaller continuation variation of a breaker, right? All of that's kind of been supported by the lower. You see how it's respecting this flawlessly? Because again, this is a balanced price range, right? An overlapping fair value gap mixed with another displacement overlapping fair value gap. When it gets below it, if it trades into it, you should anticipate, if there's a reason to go lower, right? It's a balance. It should be acting like a balanced price range, meaning that it should not break back outside of that, in this case to the upside. It'd be the same thing if this fair value gap got overlapped by a bullish fair value gap. If it trades into it, we don't want to see it break 50% of that range, because that's now balanced. They have no real reason to have to go up there unless they're going to go to the buy side, right? And if it breaks the 50%, you switch and start looking for potential buys. And if it overlaps this in here, you would then, continue to get back in line with the buy model. Appreciate the subscription, by the way. Glad you're getting value. So yeah, you guys have any questions? We're probably going to bring it to a close here pretty quick. We're just going to observe this macro. We have done a lot of delivery. It's delivered a lot. So, we may not do much more, right? It may just kind of stall out. You notice how it was very fast and then all of a sudden it slowed down because everyone's chasing price. This is why it's dangerous to try to force something towards the end, right? Towards the end of a large range move. Because think about it, if you're the smart money entity and you see people, or that human nature would promote the fact that they're going to chase price when they see this because they were scared at first or whatever, you'd want to slow it down too, right? Again, this is also a daily bullish order block. It's another, legit reason why it may be kind of slow getting into that. Saw what happened last time it hit this order block. So once it breaks the 50% of that order block, we're absolutely targeting these lows here. So just keep that in mind for future reference when we get off. It's a previous day's low as well. So yeah. Remember what I said? We should not get up here. I'm not anticipating it's going to get up there. What I am anticipating is the fact that we're going to hold this middle portion here. Maybe it runs up a little bit, attempts it to swipe some of this. I don't see us having a huge retracement. Maybe it consolidates, but I really don't see, especially not to break outside of this. It's already delivered a lot. There's no reason for it to go up there. And again, you can hear me say this and it will make sense, but you go into your chart, you're not going to be able to trust it yet, right? Once you have this change in mindset and way that you're seeing certain things in price, you have to spend the time and accept that there's a time that you're going to need to go through to build the trust, right? Trust doesn't come from someone just telling you a concept. It comes from you learning the concept. It's helpful here because things I talk about, I'm doing real time every day, right? Twice a week on YouTube, every day in my private group, right? So that kind of adds to your ability to build trust more quickly, aside from your own studies, right? But that's something that, you have to just accept, right? I encourage all of you guys, if you haven't accepted that and you have this mindset, I need to learn in a week, move away from that. Who knows how fast you're going to learn? Being in a place like this, it's more likely that you'll learn faster because I'm pushing you into things that generally people don't discover until years down the line. Some of it's useful to you early on, some of it you got to wait a little bit. But you're aware of these things, so it becomes familiar. So that when it is time for you to really implement some of these more advanced topics that I talk about at times, you already have kind of like a groove. You kind of know where it's going to fit in the overall analysis, right? In the overall engagements. So that's just a benefit to having a community like this that proves what's going on is what's going on, right? And the archive of proof is just growing every single week, because I have everything live publicly. So yeah, it's easy to test if what's done here is viable, useful for you. And I encourage you not to just take my advice. I encourage you to see things I talk about, and then you go do it. Come back, see us do it again, see us do it again, see us do it again, and then make your decision after like a month. Whether spending your time here is a good time investment. I think it is. I'm sure a lot of students, like some of the ones you saw today that smacked that sell-off that we mentioned could happen, right? I'm sure they would say the same thing, right? So yeah. Okay, so now we're starting to see for the macro, coming into the macro. We have this high, low, high. We have a failure swing. Now we took out this high. Because we took that puts this high in jeopardy here. Okay, we've took it significantly. So now I do believe we're going to dig into some of this. I don't believe that it's likely to get all the way up here. Because again, we have this to protect it. And if it's overwhelmingly bearish, like this would make you assume, this type of delivery, creating a balanced price range with the overlap of the fair value gap, it should be able to hold it. Generally, it will hold it if you're correct. If you're wrong or it's consolidated, right? Like we have overlapping candles in here. We're inside of a massive range. So again, it may bang around in here. Breaking outside of this, right? It's an amplification to what kind of condition we're in. So you got to lower your risk. But again, taking out this high here, we have this high, low, high, failure swing. Displacement through this high puts this in jeopardy. And now we've just fulfilled it like I said it would. If this high right here would have been broken, right? So this is how reversals happen all the time. It's either going to be a stop run that leads to that, which would create a breaker, or it's going to be a mitigation block, which is what this is, low, high, failure swing after a stop run. Rapid displacement through this high, drag that over, should respect it, and then take out the near-term high. If this happens on a larger time frame, obviously it's more long-term. Because this is the 1 minute, the 15-second, 30-second chart, it could be short-lived because we're working inside this larger view. The larger view is we're trading inside of a balanced price range right here, right? So it's retracing. So this whole move is a retracement. And if we get back below this again, expect that this is going to act as another resistance point that should push price back down through the downside. We also have a new week opening gap in here. You see that right here? So if we were to get down below that, that's another thing that can support us. We do have this high to that low. Price is broken up above it. If there was an expectation that this was going to dig all the way up here, that would be something that would hold price and get us up there. But the only way I would trust that being the case is if this delivers like this and then we displace hard through it, because then this will be a second change in state of delivery, like I mentioned on that higher time frame. Right, with the displacement here. Oh, let's go to the other one. This order block being taken out, and then we created this secondary order block that got taken out. The same principles happen on the lower time frame too, right? So again, if this was to be violated here, right, in a strong manner, we may see that same thing happen. And then we may look to target a little bit deeper. But if we get outside of this, again, we're going to need a lot to end up going short again, because this is a balanced price range. So that's the why behind why I think this level should hold. And if we do see it hold, you could see the justification to it. And this stuff repeats all the time. Just a same thing, different package. Same contents, different package. Do you trade afternoon? I do not. I used to. I just figured that it's overkill. It's a little much. So I'm just a AM session specialist in the indices. I could trade any asset. I call multiple assets per week, and generally they all do what we expect them to do. Like the yields, I said if it stays above this, it'll continue to go higher. That'll be bullish for the dollar. It's kind of instigated it. I talked about the bonds here being bearish, right? As long as it kept this high intact, which is an intermediate term high. If this continues to drop, right, the impact this has on the indices is bearish. If it drops, you add on the fact that the yields are rallying, that's an even more bearish signal, more bearish indication. That's part of the reason why this down movement, because we broke through all this, can now be trustworthy, right? As long as it continues this and doesn't break some of the levels that we talked about, we'll continue to see price deliver. Look, you notice that? I didn't notice that earlier. See that? It's an interesting addition. Kind of got past me. You're not going to see everything at all times. You're going to make mistakes. We all make mistakes, but even without that, we still were able to determine that, it's going to continue to go lower. That's an example of also, you're not going to need to use everything at once. You just need to build the content or build the contents of your model around core important elements, which hopefully I make it easier for you guys to see what those are here. Everything else is an addition, further confluence. So yeah, we're really liking this attempt to blow out this high here. So we'll see what happens. Dollar is a bit weak right now, at least for the time being. Whoops. So yeah, like I said, this was something that was to be expected soon, right? So now it looks like it's just, returning back into that level. Again, watch this high here. If it takes this high, it may look to go deeper. Keep that in mind, plus the midpoint here. If you're bearish, you do not want to see a strong reaction away. You want to see it prove that it wants to reject this. And then if it does do that, say it takes this high, right? Maybe it just wicks through the 50% of this here. If it does that, and then we were to displace through this low, that's when I'm back in line with trying to go short, at least for me. Some people can take this turtle soups. I'm conservative, right? I need it to come to me, right? So that's kind of my style. So yeah, this would be a bearish breaker too. It's part of our models. So we got low, high, lower low. Then we'd also have the overlap of the 1 hour fair value gap inversion, which is also, again, a balanced price range. If we were to break down below this, if it returns into that, you could see why that level would be so powerful and trustworthy to continue to try to seek something like this trend line engineered liquidity down here. And then maybe even target the little piece of the quadrant here, which is that large wick. Was it on the weekly? A daily chart right here. And then each line here is a target as it goes deeper and deeper into the wick. Target, 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 It's part of the use case for the wicks. Aside from the fact that they help us with order flow, right? Like this here, if we can't even get to this and it starts to accelerate, tomorrow we would not be bearish, because then it'll be showing that the wick's respected and it's just refusing to hold any of these levels. We're in between this wick here, bearish, this order block too, and the fair value gap, and this wick in here. And you can see what's happening. It's coiling up. On a larger scale, it's just sideways, right? It gave a retracement, drop lower. Now it's starting to come back a little bit. Again, ideally, we don't want to see this inversion broken. It's already traded buy side and sell side. All of this. Ideally, this entire range in here, from this low of this candle that's been overlapped all the way up. We do not want to get beyond the 50% here. If it does do that, then again, we're in a buy model. And then we could get back in line with seeking larger, well, I guess more long-term bullish positions again. And then we would go right back to seeking this up here. Again, but for now, we're seeking this. I want to see a reaction away from this. I want to see that turn into a bearish breaker in here. By breaking down below this, that'll put me in position to then think about a short. That's like the thought process of what I would be thinking if no trades are taken and I'm looking at price right now, given all the context that we've talked about all morning. Right? I would like to see that. That would tell me it's time to think about something for me personally. Right? Otherwise, if I'm going to take a buy, I need price to get beyond this 1 hour fair value gap inversion. Otherwise, this thing is still holding a level of importance for price to go lower. Because again, overlapping fair value gaps on a factual basis are a balanced price range in the realm of ICT Concepts with how he teaches these concepts. It's just a fact. And if we believe in the concepts and believe in what he teaches, why fight it? You know, use it the way it's taught. And just continue to build that experience. Watch how it unfolds, right? See 50% of the daily order block. Yeah, so we have this order block here. It's in the upper portion of it. Again, coming off of this, respecting this wick, and then price inverting this fair value gap in here, also breaking beyond the 50% up here. All of that stuff would be justification for us to continue to go to the buy side. If that was to basically breach this level and this level. If you take that and then you go to the higher time frame, you could see the deeper context too. That would then be shown in a very obvious way that it's respecting that and bearishness is off the table. So I hope that makes sense. It's a very high level of breakdown of, you know, what we're looking at behind the why for a certain narrative to unfold. In this case, why it should be reasonable to expect downside unless our validation levels are met, and then why those levels are the invalidation. Hopefully all that from the lower time frame here to the higher time frame makes sense to you guys, because it's very powerful stuff. I'm telling you, we do it every week, and the proof is in every video. So, shouldn't you want to take a buy on that fair value gap? Which fair value gap exactly? Talk about something in here. If you're referring to this, I did mention that this high, low to the high, I did say that any type of break that goes above this, if it's aggressive like this, it's reasonable to expect that it may look to blow out or explore a little bit next to the 50% of this. Anything above that, though, I don't want to see that if I'm going to remain bearish on the higher time frame. On a short-term counter trend basis, we did kind of lay out, you know, what would have been able to get us into a counter trend move, but it's just that. It's a counter trend. I'm not sure. Was it even worth it? Was it 20 to 30? Yeah, it went 80 points. It was well worth it. that little move in there I called out. Even if you didn't capture a portion of this retracement that went higher, you still could have caught this that got above it. There's a new week opening gap level in there that could have been used on this candle to push you up into that, with the intention of this high potentially being taken. But again, because this is a balanced price range, I don't want to see, if this is going to continue to be bearish, I don't want to see the upper portion be worked. And we can see that it's already kind of starting to turn. If it takes this low, I'm back in line with shorts. And this is also happening inside of a macro. Yeah, the Dow's kind of been a nasty bunch of BS. You see that the Nasdaq was the strongest drop, and that's because there was this failure swing in the Nasdaq, presenting us with evidence that this is the weaker of the three. So as a result, if it's going to short, Nasdaq's going to be the best short. Now, if it was the opposite way and the Nasdaq made a higher low while the other two made lower lows, Nasdaq's going to be the faster buy if you're bullish with a bullish SMT. The one that makes the failure swing in both instances is going to be the better trade. Failure swing to go higher for downside, that asset that has that's going to be the faster move. Doesn't mean the others won't get there. It just means you may have to work harder for that move. So yeah, it is already 8 o'clock now. We have talked about a lot. We've been live for what, almost, or a little bit over 2.5 hours. So I just want to say thank you guys for supporting the channel. Thank you for sticking with me this long. Hopefully you got a lot of value. Hopefully you felt that the time was well spent. I try to make it as value-packed as possible, while making sure we're, trying to spot moves and whatnot and answer questions. But hopefully you guys got value today. Anyone that's new, thank you for spending time with us. Hopefully, again, you got value, and I'll see you guys soon. We're live twice a week. And of course, I have a private group if you end up liking what happens here and you want to be part of it more in a more intimate way, that's available. If not, you could be like Tony and some of the others that are in the YouTube family. You guys are still part of the family, and, I value all of you guys. Because you could pick any other person to listen to, but you're here listening to me. Some small YouTuber who is a full-time trader, but, it's got a small following. The following can be deceiving, right? There's, in my opinion, there's more value in what we do on a daily basis here on the small channel than there are in some of these large, overly exaggerated entertainment profiles, right? Or communities who also don't trade live, who can't do this like this on a regular basis because it would expose them. So again, I appreciate you guys for spending time with me. Hopefully you got value. Again, we're live twice a week. Today was our live trading call. Watch this low here. If it breaks down below it, see if it can't give another leg. If it breaks above this, then obviously we'll have to adjust and then try to maybe seek something like this. And if it breaks this, then we're looking for the high up here. It graduates to the targets, especially when we've had such a huge up and down movement. But I'm staying solidly behind this 1 hour fair value gap inversion as a balanced price range. And unless that changes, we're going to stick to it as always. Okay. I appreciate you saying that, Tony. It's no comparison. I would honestly agree, not in a braggadocious way, but I've been here for a while. I've been through hundreds of mentors. And the one that I stuck with was ICT's Concepts. And I don't really watch a lot of people that live stream because all they do is try to get you in trades. I'm here showcasing what good trades look like, showing you the process, how to do it yourself, and you learn how to be the signal provider. You're not dependent. I'm creating independence. That's what I want. And then those of you that hang around as a result of what you learn here and with ICT, hopefully you stick around because you like the environment and maybe you want to help me on my mission in helping other traders not be caught up in the snares that are given by idiots on social media. So I'd rather have Lambo money in savings first. Yeah, that's the greatest perspective to have, because there's no reason to have a Lambo if you're paycheck to paycheck. You could, maybe you can afford a Lambo or any of these crazy things, but if it drains all your money just to get a status symbol, is that really a status symbol that's legit? Do you really have that status, or are you just trying to make yourself feel like you are, like at that status? It's a waste of money, and it's a liability unless you rent it out and it makes you money. All of that's a liability, right? So, yeah, then you can enjoy. Yeah, exactly. You got to have your financial wall built before you go full time. You got to have at least 6 to 12 months emergency, and you also want to, prove to yourself for at least a year or two that you can effectively do this, right? At least, because if you don't, what are you doing? You're just winging it. Like, oh, maybe I can do it. There's no maybes if you're going to quit your job and do all these things. I don't encourage you quit your job. Keep your job until you can double your income just with trading alone. Maybe even triple it. And who knows how many accounts you need? Who knows how big your account needs to be? That's all up to you to do the math. And whatever that number is to you. What's that freedom number? You have to know. You have to plan it, or you'll never hit it. You got to make a game plan around it. I do my best to help traders that do end up becoming excellent. I help them game plan that as well. Then of course there's some things with taxes and whatnot that you have to go ask a CPA about. I have my advice with what I do, my opinion, I guess you could say. And I'm in America, so it's a little bit different. So, but everything is pretty similar. You know what I mean? But I'm here to help you guys with that as well. Anything that has to do with trading, I can literally help. I can do my best to help you with anything that you'll ever face. What to do with certain things, because I've done it. What the next steps are. Audit your process. All this stuff is kind of part of what I do in my private group. And I answer questions to the best of my ability here too. And there's value in either choice you make to work full time with me in the private group with everybody, including myself, or if you just stick to these live calls. Students like Tony could be one of the first people to testify to the fact that this YouTube channel has a ridiculous amount of value that you can apply, and then eventually it can be beneficial to you as long as you do the right things and focus. Don't be a gambler, because they don't last long. Just like how they don't last long in Vegas either, if they're just like strict gamblers that gamble. There's a strategy to gambling professionally, just like how there's a way to do trading professionally and have a real income off of it. But in both camps, you can be a gambler and blow everything. It's a mindset. It's a business versus an activity you're gambling on. So there has to be a paradigm shift. But yeah. Nico, wow. How could you? How you had to put the 2 cents. You had to do it. Oh man. It's a running joke, inside joke. But yeah, so with that being said, again, God bless you guys. Let me know if you guys have any questions. And yeah, amazing day today. A lot of you guys did participate and be part of the initial short, and continue to see if this little gap in here, or this little breaker in here, holds up. If it doesn't and we trade through it, we may have one more attempt to get up into this. But for the most part, it should be able to hold there. So let's see if this lower portion of the fair value gap can hold. You taking trades? Yeah, I took one trade. We called out a couple different scenarios that could have played out. The trade that I did engage was right here. Captured only, I think it was like 40 points, 41 points. Small. I didn't want to push too hard with this, especially because it was so big, but we called this fair value gap in here, hesitated on that one, but then I saw this and it was a breaker, so I engaged that at the low of the fair value gap. And we did talk about how initially this was going to decline in here, at least to take these out, and then we'll see how it treats that. And then we used our validation process to continue to seek sell-side liquidity, because buy-side never really was offered, right? And now we're going into the lunch hour, so the next ideas are going to potentially be presented in PM session reliably. But like I said, if this fails here and it displaces, again, that's going to put us in position to target this if this can't hold up. So that would turn into an inverted breaker if it does do that. If it gets beyond, I'd say this candle here, it could be an inverted breaker level. It's also a fair value gap. And you could just see how that behaves, right? If it's going to hold and try to get us a little bit more inside this, we should not, if it's going to remain bearish, if our opinion is going to stay to the downside, it should stay below the 50% of this and then continue to drop, right? And again, our invalidation's up here. But early signs happen when it's, depending on how it treats this high. It could wick through it, but it has to be a wick. For now, though, it's still respecting this as a breaker, like I pointed out. So we'll see if the lower portion of this 1 hour fair value gap can continue to hold. All right. So yeah, and this line up here is the upper portion of the range that we painted as a BPR. Why is all this a BPR and this isn't being included? Because we have sell side here that's overlapped this. So that's why. So if it trades through that and leaves this low, then we look to frame this as a buy model, and then we get back in line with the larger buy model as well. But until that happens, we're going to stick to this assumption and see if we can't get it to keep going. Or it's going to consolidate. Okay? So yeah, with that being said, again, God bless you guys. Thank you for the support. Don't forget to like the video, subscribe to the channel, spread the word, right? If you have anyone that you think can benefit from this type of experience. And yeah, we'll be live again on Sunday. But till then, don't do anything crazy. I'll see those of you there in my private group tomorrow morning. Let me know if you guys have any questions in that time. And I will catch you guys on the next one. God bless y'all and have a good rest of your day.